Just about everybody is wondering how the recent interest rate decreases have adjusted our real estate market and what's to be expected in the future. And we recently saw that the Federal Reserve in the US actually cut their interest rate by 50 basis points. So maybe that is to take place here in Canada and the Greater Toronto area as well. This is going to be your real estate market update as well as my personal predictions. I'm Michael Dougal. If you are considering buying or selling, make sure to call me. And if you're a real estate agent looking to improve your business, make sure to reach out to me to learn more about how eXp Realty may help you in this very challenging market. And I'm going to draw your attention to this chart over here. And what this represents are the number of mortgage delinquencies that have taken place within RBC. And worst case scenario, some of these homeowners may actually be losing their property because they're not able to meet their mortgage payments. And what this represents are the number of individuals that aren't paying for their mortgage. And we can see just how stable and low the number was from 2017 up to mid 2023 before this massive spike took place. The article reads that the bank's GTA portfolio saw the delinquency rate climb 575% over the past 2 years. Most of these mortgages are likely recent buyers, most likely investors, who have seen their equity wiped out and would need to pay to sell at a lower price. And what we're seeing in the marketplace today is that there's over 20,000 active listings in the GTA, which is basically unheard of within the past decade. And this is likely because a lot of these homeowners simply can't afford their property. They're not selling because they would like to relocate. They're selling simply because they can't afford these monthly mortgage payments, as nobody would have expected their mortgage to have been this high a couple of years ago. So what usually would have happened would be that Economics 101 says if there's a lot of supply and there's not much demand, then you would have to adjust your price down. However, these homeowners can't afford to adjust their price down, and that's because they're already selling at a loss. And it certainly doesn't help that there are negative headlines out there everywhere talking about the Toronto real estate market collapsing, talking about the condo market. So I'm noticing in my everyday conversations with buyers, they're more concerned about buying being a bad investment, given that property values really haven't appreciated too much within the past 4 to 5 years. If we look at this chart here, we're looking at how the average price has changed throughout the past 5 years, and we can see there's of course minimal appreciation. Although I want to remind you that the 5 years prior to this, we experienced massive appreciation. So if your perspective is more long-term, like you're buying a property, you're not going to be selling for 3 to 5 years, then I would still say that real estate is going to be the best investment for you, because history tells us that your property would likely increase in value by 100% plus. Unfortunately, there's a few reasons why buyers should be optimistic about this market, and sellers as well, about the average price potentially increasing. One being that the Bank of Canada governor raises prospect of big rate cuts in the future, and this was just following the recent inflation numbers being released. The experts surprised us all by predicting it would be 2.1%, but it was actually reported at only 2%, and that marks it the lowest increase in the CPI index since February of 2021. Here we're taking a bit of a deeper look into the inflation numbers, and we can see some of the contributors to our lower inflation percentage being gasoline prices down, telephone service down, women's clothing down, purchase of passenger vehicles, and digital computing equipment and devices. And one of CIBC's chief economists says that it's really time to declare victory in the battle against inflation and get the economy moving. And there's actually quite a bit of discussion around the Bank of Canada potentially dropping the rates by 50 basis points, but not in their next interest rate announcement, rather the interest rate announcements that are taking place in December as well as January. If there's anything that surprised me, is that the average price really hasn't come down too significantly, even from the peak back in early 2022. You can see based on this visual here, we're looking at the Canadian average real estate prices in major markets in 2024, and they looked at the numbers in August 2023 as well as August 2024, and saw that the Greater Toronto area only had a price decrease of 1.38%. We saw in Greater Vancouver, their prices are just down 0.15%, and we can see a lot of the major markets actually experienced a price increase. So despite mortgage delinquencies being up, the number of sales being lower, the number of active listings being higher, it is somewhat of a surprise that the buyers are still not able to buy at discounted prices. I'll continue to keep you updated on this real estate market. Make sure to subscribe and drop a comment with your thoughts on this real estate market below. And are you personally predicting prices to increase or decrease in the future? And if you are considering buying or selling, make sure to call me. And if you're a real estate agent looking for a great brokerage with one-on-one mentorship, make sure to reach out to me to learn more about eXp Realty. I thank you for your support and look forward to seeing you next time.